Why has France arrested a software developer? Has Kamala Harris already peaked post-convention? Is SF really back as the center of the tech universe? Is a recession really looming? Is the Trump family getting into crypto and DeFi? We'll dig into all this and, of course, our market update. That's right, gang. It's time for Money Talks. All right, gang, welcome to episode 4 of the all-new Money Talks, where we bring you all things political, macro, techno, crypto, and try to break it down and make some sense of what's going on. We focus our insights into you, our Abra friends, family, partners, clients, and try to bring you the latest and greatest in everything happening in the world. All right, let's start with politics. So, the big question that everybody's asking themselves these days is San Francisco really back? Well, I don't know. It's kind of a tale of two cities, even though we're talking about one city, right? So everybody tells me that lives in SF that they feel like SF is back. I live in the San Francisco Bay Area. I have mixed feelings. I think that the kind of poor quality of the city itself, whether we're talking about San Francisco, San Jose, Oakland, the cities themselves are clearly deteriorating. The homelessness, the drugs, the thefts, it's still out of control. However, there's no denying that people are moving back, right? People who had moved during the pandemic to Austin, Miami, are coming back to SF. Jacob, here's a chart you can bring up. Is SF back? You can look at the share of engineers and also Y Combinator. The famed Y Combinator, of course, is the accelerator that invests in new startups here in the Bay. Although they invest all over the world, the number of companies they're investing in the SF Bay Area is apparently on the rise. So there are a few data points here. It's also, in addition to Y Combinator, it also leads the country in startup founding rounds. That's no big surprise. Over 25% of startup founding rounds, which is more than New York City, Boston, and London combined. So, in that regard, I don't think San Francisco's importance has ever waned. However, now when we talk about AI, things get really interesting. SF's lead in AI is even bigger, with close to 40% of early stage funding rounds in the sector all being SF based, and its share is growing rapidly over the past couple of years. And I would suspect that if you look at it in terms of the percentage of the money invested, it's probably even higher, since some of these massive multi-$100 million rounds in the AI space are going to AI companies based here in the San Francisco Bay Area. And of course, the Bay Area is the number one home for tech employees. 50% of big tech engineers, 27, close to 30% of startup engineers. It's super interesting. Again, like I said, it's kind of ironically a tale of two cities when you dig into SF, right? You've got clearly the lack of political and infrastructure leadership, but at the same time, SF is still the center of the universe when it comes to tech, and of course now AI. It used to be the center of the universe for crypto back in the early days, although I would claim that there really is no center of the universe for crypto now, and it's a very diffuse, diverse set of companies that are based all over the world, and in some cases distributed, where they don't have a central location anymore. But we'll see how things evolve. I hope that San Francisco refines itself. It's certainly lost its way the last few years. We need new leadership, but hope is not lost. I think that people have had enough, and we'll see how that evolves. Kamala Harris. So, has Kamala Harris peaked, right? So I predicted a few weeks ago that she would probably peak in the polls a few days or maybe a week after the after the Democratic National Convention. As of today, that is definitely the case. So this is Thursday. By the time this airs, she will have done her first interview on CNN. CNN released a preview of that. They are not going to show it live. It was already recorded. Harris made a statement in the preview, which was not even English and made absolutely no sense. So if this is any indication of what we're about to see, then I think the Harris camp is probably worried, and they probably should be, with the first debates on the horizon. Anyway, so we'll look forward to digging into her positions. But when you take a look here, we'll bring up the Polymarket on the screen, which has really become one of the better places to go to understand where we stand vis-a-vis the current polls. It has Trump up by about 2 percentage points, 48 to 50%. 50% for Trump as a likely presidential election winner. She's clearly leading in the national polls in terms of popular vote, but that's to be expected given the density of population in the Democratic states, particularly California and New York. Okay, so I suspect this is going to be super close. I suspect it'll come down to the debates and maybe some other last minute news or gotchas that we end up seeing in the press. But it appears that now that the public is getting its first kind of real hardcore looks at her positions and her policies, that a lot of people who are either independent or on the fence don't necessarily like what they're seeing. And we're seeing a lot of swinging back to Trump in some of the swing states, although it remains very, very close. So we'll continue to cover this. Last bit of political news. I don't know if we should call this political news or technology news, but Pavel Durov, who's the founder and CEO of Telegram, was arrested in France this past weekend. Really scary stuff, folks. Basically, he's being charged with complicity in administering an online platform that enables illicit transactions. And he could face up to 10 years in prison for this. Now, I've said for years, including before Elon bought Twitter/X, that these are not free speech platforms. These are businesses, and as such, they are subject to the laws in the jurisdictions in which they operate. In the case of most social media platforms, that means globally, right? And so it's a very complicated mess of international, often conflicting rules and regulations that vary from country to country, exacerbated by the fact that you might have one user in the US posting something on social media or in a messaging app and interacting with people in a completely different country where those rules and regulations would be in conflict. However, here, France is being very, very clear that in their mind, that there is a very good chance that he's broken French and European laws. His passports have been confiscated. He's not allowed to leave the country. And he's out of jail temporarily on a multi-million-dollar bail. So, but look, I mean, the idea that a 39-year-old, 40-year-old, I think he's 39, billionaire and I think he actually is a French citizen as well as a UAE citizen since leaving Russia. I may have that wrong, but I believe he is a French citizen. And the idea that he would face indictments for a messaging app where he is meant to be responsible for, what is posted in that app, very different than how newspapers and other, or even the phone company, right? I mean, is the CEO of AT&T or AT&T Wireless or Verizon or Deutsche Telekom, T-Mobile responsible for what we say on the phone or for text messaging on our phones? Of course not. And so I strongly disagree that a text platform, messaging platform CEO should be held responsible for how individuals use the platform. By all means, go after the child pornographers and the pedophiles and all the scum that might be doing horrible things to other people. and try to collect evidence, but to hold the CEO responsible is absurd. It sets a horrible precedent, and if anything, it will make it more likely that we'll move towards fully encrypted messaging apps where these executives have no insights or no reasonable insights as to how their platforms are being used. Of course, as always, we'll keep an eye on this and see what happens. But again, I don't know Pavel. I've never spoken to him. I do use Telegram, but as I said, very concerning precedent as it relates to messaging and social media versus free speech and the rights of software developers. Okay, Europe has taken a very different perspective on this idea of software developers versus versus free speech versus obligations for censorship, whereby in the United States that would never fly. I mean, if you're probably familiar with the Tornado Cash developers in Europe who were arrested and convicted, that would never have happened in the U.S. They never would have been arrested, even regardless of FinCEN's stance on money laundering and tumbling and DeFi and all these things. It's clearly a free speech issue from a software developer perspective. Okay, so we'll continue to track this. It's a really important topic for me, and I'm sure for many of you as well. So let's switch gears to business. One of my Twitter followers posted a comment about Apple, and maybe Apple has peaked, and as a side comment mentioned that Apple was the most profitable company in the world, and I actually had to clarify to them that that's not true. The most profitable company in the world is Saudi Aramco. They actually generate almost 2 times the earnings of Apple. Right, so whereas Apple generates over $100 billion a year in earnings, Saudi Aramco generates over $225 billion per year in earnings, and is by far, from a cash flow perspective, I can't speak in terms of earnings per share, but from a cash flow perspective, they are the most profitable company in the world by far. However, you may have seen in the news this week, Warren Buffett's Berkshire Hathaway has topped $1 trillion in market value for the first time. And this is the first non-tech company in the U.S. to do so. Obviously, Saudi Aramco is based in Saudi Arabia, but Berkshire Hathaway, being based in the U.S., is now they're certainly top 10 in terms of profit. I don't know where they are in terms of market cap, but I'm sure that it's way up there as well. I have to check the details to dig in, but I'd be very, very surprised if it wasn't in the top 10 or top 15 in terms of market cap globally. All right, so there we go, number 8. So Berkshire Hathaway currently number 8. Globally in terms of market cap, reaching the $1 trillion mark this week. Okay, so amazing testament to one of the most prolific cash flow based investors we've ever had, certainly in the West, but probably in the history of history, Warren Buffett. Okay, so let's talk about the economy in a little bit more detail right now. So probably the 2 most alarming things that I've been looking at this past week are, number 1, the savings rate, and to a certain degree, a lesser degree, not in my top 2, but the credit card usage rates for retail, which are through the roof and are extremely concerning. But housing defaults is the other thing that I wanted to mention. Housing defaults have skyrocketed. And since basically the liquidity trough of late 22, and it's unlike anything that we've seen, including since the last housing crisis of 15 years ago, right? So we'll dig into those numbers in a second, but let's come back to savings rates for a moment, right? Savings rates in this country have been contracting for a long time. Now, if we zoom out all right, and there's some charts we'll bring up here, but from the 40s to the 70s, U.S. consumers used to save around 10% of their annual income. But this number has started steadily declining, basically since around 1978, 79, 80, all right? And it's basically entered contraction territory on and off over the last few years, right? Meaning that we are a net spender, not a net saver as a country. This has only happened 2 prior times in the last 75 years where the savings rate has gone negative. The first was the 2020 pandemic when, of course, unemployment went through the roof. And the second time was during the 2008 financial crisis. And we've just entered that territory again, right? And so even the pandemic savings, right, all the stimulus checks, the stock investments, all that money has basically run out now. And so to make things worse, the personal savings rate has dropped to probably around 3 to 4%, which is an extremely low level, kind of a scary level by historic standards. So high rates, rising costs have been putting a lot of pressure on consumers. And so while the consumer is kind of holding up for now, a lot of that is maybe a managed house of cards based upon credit usage. And the runway is getting very, very tight. And if a recession is really around the corner, we could be in for a very, very rocky ride. So, this, I think, is leading to a lot of macro trader skittishness, and I think is going to lead to a pretty dramatic reversal in overall market liquidity, which is something that I've been talking about for quite a while. I think that the Fed has, given their standards, I don't agree with their standards. I think they should be completely focused on the value of the dollar and let the government and the population and free markets deal with the rest. But that ship has sailed. The Fed is in the business of trying to manage a house of cards, and that includes both the value of the dollar as well as full employment. And so, obviously, the Fed has been on an unprecedented hiking cycle since 2022, taking rates from 0 to 5.5% in just 1.5 years. Interest rates have now been above the 10-year Treasury yield for the longest period since the 2007-2008 financial crisis. Obviously, if you know anything about bond markets, this means we're in a super tight monetary policy environment. High rates obviously are going to negatively impact the housing markets, and given the high rate sensitivity of that sector, we saw what happened to home prices when interest rates were near zero, right? During the recent hiking cycle, 30-year mortgage rates broke out of the downtrend line from 2000 all the way down to 2022, and finally broke way back above that line where mortgage rates basically reached their 2001 peaks, meaning you had to go back over 20 years to find mortgage rates that high, right? And so the high rates made the housing market extremely unaffordable, right? So home buyer affordability has fallen to its lowest level in 35 years, right? Which is truly astounding, right? So home buyer affordability was really booming during the post housing crisis era, and mortgage demand obviously as a result has plummeted as high borrowing costs have just destroyed new mortgage origination demand, and not to mention refi demand as well. So as unaffordability has grown, high inflation has put pressure on the consumer, and the defaults have started rising. It's exactly what you would expect if you think about this logically. So the delinquency rate for multifamily homes has also hit levels that we haven't seen in well over a decade. Even now, people don't feel like buying homes, right? Buying conditions in the U.S. housing market have simply collapsed, again, reaching levels that we've only seen a couple of times since 1960, right? This is probably the worst that we've seen since the mid-70s to early 80s in terms of buying conditions for consumers. So what does this mean? Well, right now, if you look at, I looked yesterday, there's about a 65% chance of a 25 basis point rate cut next month. And right now, about a 37% chance of a 50 basis point cut. So that means that effectively some type of rate cut is effectively guaranteed in September. And that should start to provide some relief to the housing markets. But I think the housing market woes have really, really just started. And it tends to be a trailing indicator, and it's going to take a long time for that Titanic to turn as market liquidity and increases and interest rates come down. So it could take a couple of years for that to turn around. I think Silicon Valley and a couple of other kind of booming geographies globally will be somewhat immune, but nowhere will be completely immune to I think what's coming. Because so many families in the United States and in the West extract the majority of their net worth from the value of their homes as well. All right, but for now, it's interesting. The stock market still has a pretty bullish structure. We had with the recent kind of breakdown when Japan announced that it was going to raise rates. That all of those short-term losses have been more or less recovered in the traditional markets at this point, right? So what that really tells us is that we're still sideways and people aren't necessarily sure, but with liquidity increasing, the economy softening, that is usually very, very bullish for risk on assets. And as I said, it most likely means that if stocks are going up, right, bond prices have to go up even faster in order for the economy to get back into some type of fixed income versus equities balance, right? And if stocks don't, if bonds don't go up significantly faster than equities, my guess is that we'll see a crash in equity prices during the same time frame. So, we'll see, but right now my guess is liquidity is coming. Risk on assets will go up in value, and of course that will positively impact crypto prices. So why don't we segue into Bitcoin with that, right, and talk about what's happening in the Bitcoin and crypto markets. So we'll talk about President Trump getting into potentially the Trump family. I mean, getting into the crypto or DeFi business. But let's talk about Bitcoin first, right? So the NASDAQ is requesting permission to launch Bitcoin options, which I think is really interesting. They're seeking approval from the SEC to not only launch, but to trade Bitcoin options. Follows an announcement by the New York Stock Exchange early this year, also looking to list Bitcoin index options. Neither exchange has received approval from the appropriate regulators as of yet, but I suspect the regulators, even if they deny, who knows why, but it's crypto, even if they deny in the short term, have no choice but to capitulate and make options available on both exchanges. And I think that makes sense. Pretty much any large cap stock has derivatives, options, calls, and puts available to traders in most of the Western markets and large exchanges. And given that we now have securitized versions of Bitcoin and Ethereum, obviously it makes little sense not to have the same options available for both of those as well, right? So we'll continue to track it, but I suspect it'll get approved. Even if it ends up in court, just like the ETFs, I don't think there's much of a case to be made for not approving those options. And why do we care? Why do we care if we have options on Bitcoin via stock exchange? Well, options tend to create more efficient markets, right? They give speculators tools for hedging. They give speculators tools to have increased leverage, and these things over time historically do make markets more efficient, and there are instances where they create problems, of course. But I don't think we're in that territory as it relates to Bitcoin options. Okay, so I'll have more to say about that once they're approved or officially denied. Although I suspect, like I said, they will get approved at some point over the next year or so. Maybe with a couple of denials in between. We'll see. All right, so that's Bitcoin options. Let's take a look here at what's happening with the Bitcoin price. We're hovering at right around 60. I'm just looking at the price here, right around 59,000 and change, actually 59,200. So yeah, it's basically been a sideways year, really. I mean, if you think about it, the upswing we had post ETF approval was back in February, and so now you're basically at the end of August, right? September is next week, so that's 6 months of sideways price for crypto, right? So Bitcoin is basically at the same price, more or less, because to me, 60,000, 70,000 in the big picture, that doesn't really matter that much. This is an exponentially growing asset. It is basically the same price, all right? So, and so I suspect that the initial idea of rate cuts and market liquidity increasing has been mostly priced in. The initial upswing in Bitcoin from 40 to 70,000 was mostly via pent-up demand for 401ks and IRAs to invest in Bitcoin. That has more or less played itself out. Now the markets are asking themselves, okay, does the Fed capitulate to this idea that the economy is slowing dramatically and it's game on from a risk on assets perspective? And of course, crypto gets the outsized portion on a relative basis of that liquidity, which would drive prices higher. I think it does. I think we're going to see a significant amount of liquidity enter the markets over the next 18 months. I think you're going to see, this is my opinion, it's not investment advice, but I think you're going to see a significant run up in crypto prices as a result. It doesn't really matter so much if I pick the top assets, right? I'm looking here at right now Solana, which is trading at about $140 as of the time of this writing. It's basically been sideways. It's more or less hit the same price every single week. I'm looking at the weekly charts all the way back to April. Actually, no, all the way back to March. It's hit the current price all but, let's see, 3, 4, 5, 6, I think 7 weeks it didn't hit the current price, but all of the other weeks out of the last, what is that? That's 7 months, so 28 weeks. So basically 20 out of the last 28 weeks or so, Solana has more or less hit the 140 price, right? So that really tells you that we're in a relatively low volatility sideways band that we've been in for quite a while. And that's more or less true for Bitcoin as well, right? So a little bit more relative volatility at the top of the channel there for Bitcoin, but still sideways, exactly where it was in late February, early March. And I think the market is looking for liquidity direction now, and I think that direction is coming. And I think that people will be surprised at how bad the economy goes south. I think that the job numbers, the jobless claims that we talked about last week, where they basically lied to us about the number of new jobless claims, and the real number was like about 1 million jobs worse than what they were claiming, I think really points to this idea that the economy is softening extremely quickly, and that they've been trying to fudge the numbers to make their case, to raise rates, to have room to refinance the debt later on. So that's the Bitcoin macro story. Yeah, Trump and DeFi. So the Trump family has been tweeting for a couple of weeks now that they're going to be launching a new DeFi project. And they've kind of been linking this to this idea that the U.S. needs to be the best place in the world for crypto. He said he'll have more to say about this today during one of his talks. We'll see online if that happens. But this new project called, I believe, World Liberty Financial. And we don't really have a ton of details. Trump said in a statement this afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet. They want to choke you. They want to choke you out of business. We're not going to let that happen. Now, of course, we don't know exactly what that means. The rumors are that World Liberty Financial will be a DeFi-oriented project. Again, we don't know exactly what that means. Eric Trump, son of the president, has also said, I have truly fallen in love with crypto/DeFi. Stay tuned for a big announcement. And this was about 3 weeks ago, right? So we haven't had that announcement yet, but he did give this interview to the New York Post where he teased about the project. And he also made the comment that essentially over half this country right now cannot be banked. I don't know if that is actually true, but he meant that they will be rejected from most loans from most institutions. But with this technology, they could have the ability to almost instantaneously be approved or denied from a lender based on math, not policy. That I actually think is generally true. It's assuming that folks have a smartphone. I think the future of banking will be DeFi based via smartphones. And so anyway, then they launched a Telegram group, which I think is like 50,000 plus members within a few weeks. So I think my personal feeling is I love that the president has embraced crypto as part of his platform. He literally wrote it in himself into the Republican platform that they launched and announced at the Republican National Convention a few weeks ago. I don't think the idea of the Trump family getting into the DeFi business during an election cycle is the best of all possible ideas. But we'll see what that really means when they make their official announcement on what World Financial is really all about in the coming weeks, and or World Liberty Financial is all about in the coming weeks. And I look forward to digging in once we know more. Okay, so let's see, what else do we have to talk about? So we talked about crypto. We've got to talk about Nvidia. Nvidia stock was falling the last couple of days after, ironically, handily beating their earnings guidance, but not beating it by as much as they had beat it in previous quarters, right? So you may say, well, what the hell? I mean, how much do they have to beat their earnings guidance by in order for the stock price to go up? Well, this stock price is clearly out of control, and it's experiencing exponential growth, the likes of which the United States, I'm not sure if the United States has ever seen, certainly not in the last set of decades. It's growing even faster than Apple was over the last 10 years. As a matter of fact, I saw a Motley, I think it was a Motley Crue article that said there's a good chance that Apple will be worth more. Nvidia will be worth more than Apple by 2030, and that their earnings and stock price have massively outpaced Apple's growth since 2014. And the chip maker, they claim, has a very secure position in AI and a lead over its main rivals. I don't speculate in stocks for the most part. I'm basically a crypto guy, but I think AI is super important to the future of crypto, to the future of transactions on the internet. However, I think that right now, the company that I'm really interested in is OpenAI. I think Apple is about to make a large investment. That's the scuttlebutt into OpenAI. That makes a lot of sense. Apple's about to launch a new version of iPhone OS with a new version of Siri that includes ChatGPT, which is from OpenAI, directly integrated into the iPhone OS. That is massive. I think you're going to see a huge boom in people using Siri again, and it's going to basically, completely change how we interact with our phones, and it's going to be akin to the boom that the financial boom that Google experienced by being the default search engine in the Safari browser on the iPhone. I think being the default artificial intelligence interactive system for the iPhone, which it appears that ChatGPT is going to be with its integration with Siri, I think will propel OpenAI as a company to stratospheric heights in terms of its already lofty valuation. And I think unless they go public pretty quick, I think OpenAI could be the first kind of tech $1 trillion private company. Maybe the finding, I just did a brain freeze on the payments company that is worth I think a couple $100 billion now, but was probably worth 5-6x more than that. May have been a $1 trillion company. Stripe, sorry, that's the company I was thinking of. That Stripe may have been a $1 trillion private company before, but is certainly not now. But I think that OpenAI is clearly on the way to being the first sustained $1 trillion company, unless they go public sometime soon. And I think obviously the interest in them, if Apple and Nvidia were to both invest in OpenAI, would really, really, if it wasn't already through the roof, would certainly go through the roof. So I'll wrap up the tech news with some space news. Former NASA guy, so I'm a huge fan of all things space related. Love what SpaceX and Starlink have been doing. Unfortunately, things have not been going as well for Boeing, as if their woes weren't bad enough on the commercial front. On the space front, NASA's initial launch of the Boeing Starliner capsule has not worked out very well. The space agency announced this week it has finally decided that the 2 astronauts who have been stuck at the International Space Station will have to come back on a SpaceX Dragon capsule next year. Okay, they were sent into space on an 8-day mission in early June. Okay, so they went into space thinking that they were going to be up there for 8 to 10 days, and it's now going to turn out to be months up in space. So not something that either of them signed up for, and it speaks volumes to this kind of sad state of affairs of government-sponsored space flights, and the positive state of affairs on the commercial side, which is where SpaceX operates. And so it clearly looks like NASA has no choice but to trust SpaceX to bring those astronauts home. PBS and others have covered this. There's some really good coverage online of why the thrusters related to the new Boeing aircraft have failed. The Starliner, it shows promise, but why they would send these astronauts up into space and not be 100% clear on how they were going to get them back is mind blowing to me. But that's what we've devolved into on the government side of international or government side of spaceflight. So let's see. So like I said, we'll cover this in more detail in the coming weeks. But great news for SpaceX, rough news for NASA. And I hope the astronauts are able to make do and settle in for what looks like it's going to be several months of tight quarters up in space. Okay, so we covered a lot. Let's see. We talked about SF, Harris and the debates, Trump pulling ahead, Pavel's arrest in France. Berkshire Hathaway reaching $1 trillion valuation, housing defaults skyrocketing. Looks like liquidity is about to go up significantly with predictions for not only Fed rate cuts, but other forms of government-backed liquidity coming into the markets. And that should be good news for crypto and other risk-on assets. OpenAI and Nvidia and Apple kind of working in tandem now to bring the artificial intelligence AI model that we've gotten used to directly to the iPhone and I'm sure to Android phones in short order. And lastly, of course, SpaceX is bailing out NASA of their predicament on how to get their astronauts home. Ton happening, and that's just scratching the surface. So we'll stop there and wish you all a fantastic holiday weekend, and we'll see you next week on Money Talks. Okay, so that was the Money Talks update for the week, and I'll give you, starting today, I'll give you a quick Abra update for those who want to stick around after the closing credits here. First, I'll say go check out the recent Deribit podcast featuring a couple of members of Abra's awesome trading team. They're now giving pretty regular insights as to what's happening in the markets and how the election cycle is likely to impact overall volatility in the crypto markets. Pretty technical stuff, super interesting. But if you're in any way interested in the technical nature of what happens in kind of short-term trading and pricing of markets, the Deribit podcast, which you can find YouTube and Apple Podcasts, is super interesting. So thanks to the Abra trading team for that. And also wanted to give you all an update on Abra Private. Abra Private is Abra's latest offering for high net worth individuals, financial advisors, trusts, family offices. It's a comprehensive suite of digital asset wealth advisory solutions. You can trade and invest. You can buy and sell 100 plus digital assets, deep liquidity, low slippage on trade execution. You can earn yield on Bitcoin, stake Ethereum, Solana, stable coins to earn yield on those digital assets. You can borrow against your digital asset collateral and unlock liquidity. And LTVs and rates can fluctuate depending upon your own personal risk tolerance. So if you're holding a bunch of Bitcoin, you don't want to sell, but you want to access maybe some of the price gains, the Abra Private account may be a great option for you. Abra also runs a series of digital income fund portfolios, and if you're interested in investing in altcoins, maybe one of those funds might be a good idea for you. If you're interested, just go to abra.com. That's abra.com, of course. Click on Get Started, choose Abra Private.